Hi everyone, this is Daniel Goott with Investec Wealth Strategies with a special edition video update on Britain's recent vote to exit the European Union. With all of the market turmoil, we felt this was a good time to reach out and share our perspective. So we're going to answer 5 main questions in this video. Number 1, what is Brexit and why does it matter? Number 2, how could Brexit affect the US markets? Number 3, what impact could Brexit have on the global economy? Number 4, how could Brexit affect the US economy? And lastly, number 5, what should investors like you be doing right now? So let's start by taking a step back and asking, how did Britain get here? Well, to answer that, we have to go back in time and take a look at some history of Britain and the European Union. Britain originally voted to join the European Economic Community in 1973. A couple years later, Britons voted to remain within the new European Community, which then became the modern European Union in 1991. Economic and political circumstances have changed drastically since the 1990s, and British citizens demanded a new national referendum on EU membership. The issues at stake were complex and involved things like British sovereignty, trade, regulations, and immigration policy. Ultimately, the vote was about this. Did Britain see a future within the EU, or did it want out? Well, as we saw last Friday as the results came in, British citizens voted to leave. So now let's talk about the effect that Brexit is having on the markets. The vote to leave surprised investors around the world who reacted by selling. This is not an unexpected result because markets hate surprises and everyone felt that Britain would vote to stay within the EU. History tells us that recent market movements are probably an overreaction in response to the fear and uncertainty. If we look back, we see that since World War II, when there have been political shocks like this, markets tend to oversell and then rebound in the weeks and months that follow. So that could mean that stocks aren't done tumbling. Though the past doesn't predict the future, we can look at other similar events as a guide. During the crisis around the Japanese earthquake in 2011 and the European debt crisis in 2012, markets experienced double-digit losses and then recovered within 3 or 4 months. While political events like this rarely have a long-term effect on markets, we should also keep in mind that 2016 has brought many geopolitical challenges to our door, and headwinds are getting stronger. We should expect a lot of volatility going forward and a lot of headline risk. Now, headline risk is what we call it when markets overreact to media coverage of events. We can also think of it as the Chicken Little syndrome. We'll talk more about what investors can do at the end of this video. But now we'd like to talk about the potential economic impacts of Brexit on the global economy. In Britain and Europe, a lot of the risks are political in nature. In Britain, it's possible that this vote will splinter the United Kingdom. Northern Ireland and Scotland both voted to remain within the EU, and they may vote to leave Britain in order to rejoin the EU. Britain also faces new elections in October once the current Prime Minister David Cameron steps down. You can bet that negotiations around leaving the EU will play a huge role in the elections, and it'll get messy. Now, exit negotiations are also likely to drag on for months and possibly years and be the source of a lot of political distress. We can expect plenty of volatility in the financial markets as those negotiations are hammered out. Economists also worry that Britain could lose a lot of multinational corporations who rely on access to the European markets and the free movement of European talent. As we all know, London is the center of Europe's financial world, and a loss of those financial firms would be a major blow to the British economy. the fallout from Brexit could be enough to push Britain into a recession. Europe has several key elections coming up as well in Spain, Italy, and France that could be affected by Britain's vote. We'll be watching these elections carefully. One of the big worries that experts have is that Britain's vote will be the first of many anti-EU votes that could cause a rush to the exits by other EU member countries. Britain leaving is complicated enough, but if a member of the euro currency union, like the Netherlands or Greece, left, negotiations would be even more complex. No one knows what the breakup of the EU would look like, but it wouldn't be good for the global economic growth. We do also want to point out that many economists are a lot more upbeat. They believe that the most catastrophic scenarios are unlikely to play out. Since Britain and Europe need each other, future negotiations are likely to be favorable to both sides. European leaders are also a lot more likely to make needed reforms to keep their citizens happy and avoid Britain's fate. So how will Brexit affect the US economy? Well, that really depends on how the divorce is negotiated. Again, there is no consensus among economists, but here's what we do know. Trade with Britain accounts for just 0.3% of total US GDP. So British problems with trade won't necessarily affect us. We don't foresee any structural changes to the US economy as a result of Brexit. Some companies and sectors will be more affected by others, particularly those that have more revenue exposure to the UK. We could see an effect on their corporate earnings. However, the dollar is often viewed as a safe haven in times of international turmoil, which is pushing the dollar's value up versus other currency. A stronger dollar may weaken demand for US exports, which may have the effect of dragging down economic growth. We should keep in mind the fact that the US is a consumer-driven economy and that wages, the housing market, and improvements in personal finances all support consumer spending right now. So, will Brexit be enough to push the US into a recession? That's not really likely, though it could contribute to weak growth in the next couple of years. We think a major factor will be whether the market turmoil is enough to have a negative impact on business and consumer confidence. If so, we could see a greater effect on the US economy. Britain's vote will likely affect the Federal Reserve policies this year. Post-Brexit, expectations of a rate increase this year have gone down tremendously. Whereas predictions of a September rate hike were at 30% before the Brexit vote, they now stand at 0%. In fact, some experts even suggest that rate cuts may be back on the table if economic growth slows. We'd like to close by talking about what investors should be doing right now. First of all, try to tune out the noise. We're going to see a lot of terrifying headlines about Brexit, and it's not good for your mental or financial health to be glued to the media. Let us filter through the news for you and communicate what you need to know. It's really one of the most important parts of the service we provide you. Second, focus on your own financial goals. Political events don't change your goals, and it's critical to avoid emotional reactions. When markets tumble, the smart move is to sit back, take a look at fundamentals, and make prudent changes where necessary. We will be in touch if we decide we need to shift any of our strategies. Third, regardless of which directions the markets go, we can expect a bumpy ride. Fear and uncertainty are going to rule the market for a while, and stocks may tumble even more. But please do not panic. It's too soon to tell what Brexit will mean for the markets long term. No one can agree on probable outcomes yet. Though we don't think that Brexit is the end of the world, we do want to acknowledge the risk it poses to markets. We believe that bull markets don't die of old age, but we are facing growing headwinds from abroad that may threaten the bulls. We are closely watching economic data and market research as it comes in, and will be communicating continuously with you in the weeks to come. But right now, your job is to stay calm and focused on your goals, knowing that there are professionals who are taking care of the details for you. You can stay abreast of critical information in our weekly market commentaries, our monthly video updates, and our upcoming halftime report. Once again, this is Daniel Goott from Investec. Thank you for your time in watching this video. If you do have any questions, please feel free to reach out to us at 713-622-9111.